Ask me how I know that this economy isn't done getting worse yet. Go ahead, ask me. This, this is why. DoorDash stock surges after sales beat expectations. DoorDash, all right? First of all, the most expensive food you could ever eat is a meal at a restaurant. And the only way to make that more expensive is to be so lazy that you have to pay somebody else to go get it and bring it to you. Enter DoorDash, a company that exists for the sole purpose of enabling that laziness, of enabling the most expensive food imaginable. And then keep in mind, we're in an age of inflation where food is becoming less and less affordable. Folks, this article right here is the embodiment of everything wrong with our economy. And this is how I know things have to get worse before they can get better. Shares of DoorDash popped more than 14% in extended trading Thursday after the food delivery company posted better than expected sales and total orders in the third quarter. Here's how the company did. A loss per share of 77 cents versus 60 cents expected. Now, correct me if I'm wrong, but when companies lose more money than they're supposed to, shouldn't the stocks go down? I just throw them out there. Of course, the real reason why this stock is surging is because the revenue increased. They were expecting revenue of 1.63 billion and they ended up getting revenue of 1.7 billion. And doesn't that just go to show you how much we deserve to have a worse economy? Even despite all the inflation, despite all the people who are out there saying, "Oh, forgive my student loans and I can't afford my credit card debt." And yet Americans will still send $1.7 billion to some other guy to go pick up his takeout. Now, remember this chart right here, folks. This is the chart of America's credit card debt right now. We're up to almost $1 trillion. You see that here? Almost $1 trillion of credit card debt in the United States. Maybe the reason that number is so big is because we're still sending $1.7 billion a quarter over to companies like DoorDash just to pay some other guy to go pick up your takeout and munch on your fries while he brings it to you. And this number, despite the inflation, despite the fact that wages aren't going up, despite the fact that interest rates are getting more expensive, and thus the minimum payments required to service this debt are getting more expensive, Americans continue to splurge on things like DoorDash, even though we're now $1 trillion deep in credit card debt. Now, there is a reason why I end every video with live small and dream big, because I found making sacrifices and foregoing in certain luxuries and certain comforts is a way to achieve financial independence. You can save a lot of money if you cut out unnecessary expenses like DoorDash and live a lean life. That can enable you to do better things later on in life. And I'm able to live the way I live now because for most of my life, that's exactly what I did. I sure as heck didn't go into credit card debt to pay some other guy to go out and pick up my Olive Garden and bring it to me. Oh, and by the way, according to my numbers here, DoorDash's loss this quarter triple their loss from the same quarter a year ago. So not only does this company not make money, not only has this company never made money, this company is losing money faster and faster every single day. And what does this stock market do? This stock market rewards this company with a valuation of almost $20 billion. That can't be right. $20 billion valuation for DoorDash. This. I'm out of here. I quit. Live small and dream big.